Didi's IPO was a flop. They've taken a 30% haircut from their highs after regulatory authorities come down hard on the company. In today's video, we are going to break down the fact pattern of what happened when. We are going to pull out some themes that you can use if you're going to evaluate any Chinese tech firm in the future. And we're going to make some mild speculations about what might be coming in the future. Stay tuned.
It is Friday, July 9th. This is the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for more than 26 years. That's longer than I've been alive. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and flight simulations. For more details, visit jetstore.com. Thank you for sponsoring the rundown. I feel like this one's going to be a doozy.
Yeah. We've picked up a ton of subscribers over the first half of the year, and one of the primary drivers of that is our analysis of initial public offerings hitting in usually US markets. And we do that analysis before the equity goes public so that, number one, we can take advantage of the search volume that comes in, but also so that our viewers can be relatively more prepared as that offering happens and they can make their own independent financial decisions. We chose not to cover Didi. We know these IPOs are coming weeks in advance. We made the conscious choice not to cover Didi, a Chinese-based ride-hailing service similar to Uber or Lyft. And the reason for that, if you're a longtime viewer of the channel, is that we tend to carry a general skepticism for these Chinese-based companies because of movies like The China Hustle and these other stories like that of Luckin Coffee, where a company is brought to market, turns out to be an outright fraud. And what enables that to happen is both the existence of them in a single party regime and a lack of standards around auditing that other companies based in the United States are held to. So we chose not to cover Didi, and we're hoping that it could just pass without too much of a bellow.
Hullabaloo.
And that did not end up happening. So what we're going to do is we're going to cover the fact pattern of the last week and a half with Didi. We're going to talk a little bit about the major thematics that not only are affecting this story, but as you bring your own brain and your own lens to future stories of Chinese-based firms choosing to go public in the US market in particular, or international markets generally, you can bring this frame as you make your own evaluation and decisions about these types of equities. Here is the fact pattern, Hannah. The company IPO'd on Wednesday, June 30th, at about $14 per share. That per share valuation led them to raise $4.4 billion, and we're not giving the fancy billion here, at a valuation of $67 billion, which is effectively flat from their last major private funding round back in 2019. Friday, July 2nd, 2 days later, the Cyberspace Administration of China, one of the major regulatory bodies focused on internet firms based within the Middle Kingdom, said that it was starting a cybersecurity review of Didi over practices associated with the personal information and data that they collect from primarily Chinese citizens.
Yes.
This is a firm that has 90% market share in the authoritarian single-party regime that is China.
Right.
Just 2 days later, Sunday, the 4th of July, that same Cyberspace Administration of China bans the downloading of Didi from all app stores within China. They have the capacity to solicit, whether it's not Google, but the Apple App Store or these other app stores that are prevalent. Actually, I'm sorry, the Google Play Store is within China. Right. It is Google, the search thing that's blocked. block the downloading of Didi. Now, that's not the removal of it. So they still have 90% market share, and the bulls, we will be having a brief bull and bear session at the end. The bulls will say, well, they still have all that market dominance, and once they go through the cybersecurity review of the Chinese Communist Party, they will be able to maintain that said dominance.
Right.
However, with the sweeping antitrust actions that the Chinese Communist Party has been taking against its largest internet firms, trying to hedge the power of these different entrepreneurs and private businesses, this is a continuation of a theme that has been playing out for quite a while. Didi was disclosing this as part of their S1, part of their filing for public offering, and it was known that 34 internet firms, including Didi, were under review as early as April.
Yes.
That being said, with this aggressive action, the equity took a 30% haircut in valuation over the course of the last week once this news broke. It went 14, we'll throw the graph up there, but you can see how this has had some relatively significant fluctuation. And we chose not to make any sort of recommendations about this.
Right.
Jim Cramer did not fall into that same category.
Now, there are some antitrust concerns here, but as long as they stay on the Communist Party's good side, and I know it's probably hard to do, but as long as they do, I doubt they'll have much trouble with regulators. So if you want to speculate on a Chinese IPO, you've got my blessing to bet on Didi. I would try to get as many shares as you can.
So takeaway number one, YouTube, Google, if you're watching this, we can presume that you are not within the firewall that constrains the information that local Chinese citizens are able to garner. So you are outside that firewall, and so therefore we can confidently say that you are probably not equipped to anticipate nor completely comprehend the actions that the Chinese Communist Party takes and all its associated motivations. You can get general sweeping trends, but you're not going to know. We're not pretending to know. We're not coming to you as, hey, we know authoritatively one way or the other.
But we're pattern matching here.
The pattern matching is damning. This was not something, it is not as if the regulators did not know that Didi was going through with an IPO.
Right.
And it is not the case that Didi, going into their IPO, was not aware of the intensive scrutiny that they were under. Right. This is not the type of thing that just comes out of completely left field. There is some degree of information known on the ground. And so here is the important detail that you have to understand with all these companies that come public from specifically the Chinese market into international markets. When they list on the New York Stock Exchange, the goal is not to raise capital from Chinese investors. If they wanted to do that, they would list in Shanghai,
right.
They might list in Hong Kong. They would not head to the opposite hemisphere. Mm-hmm. They're going because the capital markets in the United States are the largest and most developed on planet Earth. But generally, international markets, if they want to reach Europe, if they want to reach these other entities, it is much easier to do so by leaving their very different regulatory structure where there are all sorts of rules within China. If you are not a Chinese citizen, you can only own one residential piece of property. And technically, you don't know it because ultimately, all that residential real estate is owned by the state. You can't go buy an office building.
Right.
Similarly, you cannot hold control in a Chinese entity itself. This is something called a VIE structure where Didi is actually like 7 different pieces, and there's a part in the Cayman Islands, there's a part in the British Virgin Islands, there's a part in all these different layers. So actually, in certain ways, similar to what we saw with WeWork.
Mm-hmm. Oh, man.
To draw another similar, this very complex, arcane corporate structure. And when they are choosing to bring this company to the New York Stock Exchange, they're looking to raise from these institutional investors. And there was all this debate with like the GameStop, AMC, Reddit stuff. That the reality is that these are hedge funds and pension funds and institutional investors, often investing on behalf of these kind of public goods. So the teacher's pension, the police officer's pension, the firefighter's pension, so on and so forth. That's not the only one, but that is a portion of who would have invested in a $4.4 billion IPO. So when there is a 30% haircut and there was a material piece of insider information that would drastically reduce the value of the company, and that is not disclosed until 2 days after the public offering, it is very hard for me to interpret that as anything other than a form of stealing, robbery from capital markets in a geopolitical nation that you are, to some degree, an adversary with.
Yes.
And the folks that were selling into the highs pre this piece of news drop
Right.
were the initial shareholders of the company. That's not me saying that an entrepreneurial, endeavoring person based in China does not have the right to amass wealth by building a company there. I think that's completely fine. However, one of the standards for making it in a single party authoritarian regime is you got to wet the beak, you got to put some money in the pockets of the entities that are in control. And this is well documented with companies like Alibaba. This is well documented with companies that come out of China, is that there is a significant portion of equity held by CCP members.
Yes.
Not just the executives, but the other just kind of associated parties that allow a company like that to get 90% market share, to not be shut down earlier by the firewall, to not be inhibited in an internet system that is so tightly controlled.
Right. And I mean, you as a US person who would be investing in Didi, that's not something that you would necessarily think about. Like if you see 90% market share, you automatically think,
That sounds amazing.
awesome.
But those were the insiders who were able to sell early. Those were the insiders who were able to sell their shares at the higher valuation and pass them off to the rubes who now have to hold the bag at a lower valuation or sell at a lower valuation. I am not saying that I have a problem with people buying at the wrong time in markets. Everyone enters markets with their own risk. We try to warn you about that every single video. But when there is such a material, specific single actor that can wield such enormous influence, that's why we are skeptical of ever investing in those entities. So that's theme number one. Theme number two, Chinese firms are not held to the same auditing standards as US-based firms. So they come to the capital markets, and this is something that multiple senators have tried to bring via legislation. I do not understand why this isn't something that we're capable of passing, but they are not held to the same auditing standards that other US firms are required to in order to list publicly.
Right.
So while they claim, Didi, that they're profitable, while they claim these certain numbers about revenue, we have absolutely no way of verifying that information.
I mean, this is just one of those things where if it looks like shit and it smells like shit, it's probably shit.
We have a segment on these IPO videos where we usually call it the meme factor, and what we'll do is score something 1 to 5 in order to evaluate how the narrative is basically where we think the narrative currently stands with an entity and what that might mean about the valuation. We're going to do something a little bit differently here with the meme factor and talk generally about narrative management, PR, and those type of moves that all sorts of companies pull. This is not exclusively Didi or China-based story, but this example is the perfect, I would say, barometer of some of the dark arts of PR. This move happened on Friday. It happened midday Friday, as many people were winding down. I don't know about you, Hannah, but going into the 4th of July weekend, that Friday, I'm a little bit checked out. I'm a little bit thinking about what am I doing this weekend? Who am I spending my time with? Not glued to the news. Then the fact that this official ban dropped on Sunday, the 4th of July, wow, this is really affecting Didi in US capital markets, is indicative, and this is something that, you know, the White House has pulled. Both the left and the right, they'll drop bad news late on Friday afternoon. This is something that companies do in order to get out of the cycle. You have a good story. There's a reason there's always good stories at the beginning of the week, is because when someone has big news that they want to drop and they want to own the news cycle, they drop it Monday morning, they drop it Sunday night, they drop it sometime early in the week so that the ongoing news cycle will pick it up and run with it. Conversely, if you want bad news tends to drop Thursday or Friday, or maybe over the weekend. Because that's when people are checked out, trying to live their own lives and not being glued to the news. You shouldn't be glued to the news. But the choice to make these moves on those specific days, we are suggesting was not an accident. There's this notion like we're just randomly acting balls, all kind of bumping into one another, and you can't really anticipate the stuff. Bullshit. Bullshit, bullshit, bullshit. This was a strategic decision to obfuscate this move. And now these authorities are saying, oh, we're worried about these companies listing in US public markets. Bullshit. Bullshit. Just made a bunch of money. Just made, what's 30% of 4.4 billion? Over a billion.
Over a billion.
Over a billion. You just made a boatload of money. Bullshit.
Yeah. It's just, it's frustrating.
Yeah.
It's very frustrating.
On to the bull and the bear case. If you are a bull, here is what you're hanging your hat on. Here's the most likely story that you're continuing to tell yourself. This is still a nation with 1 billion people. This is still a nation where they have 90% market share. They do not have the competition. If they abide by the regulatory constraints, they are going to continue to be able to monetize a market that they have relatively low competition on, meaning that there is a capacity for profitability. You sit there, feel free to leave a comment and tell us why you are so confident in that position. If you are a bear, I would boil it down to 3 things. Number 1, there's an opaque corporate structure with entities in the Cayman Islands, British Virgin Islands. Your confidence in that you actually own shares of this and that couldn't be swept away and kind of recontained down to something is less than certain. So that is one of the risk vectors as you're evaluating this company. Number 2, they have unaudited books. We cannot have complete confidence in the revenue, profit, and other associated financial metrics associated with this company. And if that has materially changed because of these regulatory efforts, we will probably be the last to know, given their timelines for financial reporting and the lack of auditing standards. And finally, regulatory crackdowns seem to be speeding up in China as opposed to slowing down. And it is hard to anticipate a reason why they would be slowing down anytime in the future. And I would say perhaps number 4, there could just be, maybe there won't be, but this could be one of those worm turning type of moments where Wall Street generally, not wanting to get bamboozled, not wanting to get whacked again, will have a higher degree of skepticism moving forward with these types of companies, given the I would say audacity of this Didi move.
Yeah, it is pretty wild. Like within 48 hours, this all goes down. You would hope that we'd learn from our mistakes.
Here's to hoping.